Good day, ladies and gentlemen. I'm Amit Kaushik, Chief Marketing Officer, ALTech Group. I welcome you to our second webinar and podcast on the global market outlook. International Monetary Fund has released its new World Economic Outlook. Their projections show the global economy is experiencing a sharper than expected slowdown, and inflation is higher than seen in many decades. Globally, increasing cost of living, tightening financial conditions, Russian-Ukraine war, COVID-19 are taking a toll on the world economy. Global GDP would be sliding from a projected 3.2% in 2022 to 2.7% in 2023, and advanced economies slip from 2.4% in the current year to 1.1% in 2023. Emerging markets and developing economies remain stable at the same level of 3.7% in 2022 and in 2023 as well. The US, the Euro area, and the Middle East, Latin America are projected to see a dip in GDP from 2022 to 2023. The GDP percentage growth of few leading economies over the last 40 years and projection of the next 5 years would be interesting to see. The economies took a dive in the early 1980s, 1990s, 2008-9, 2020, and now 2023. We can see these trends in a few Western economies like US, the UK, Germany, France, and Italy, then in BRICS countries too, and in economies like Japan, Turkey, Saudi Arabia, and Mexico, for instance. From 2022 to the GDP of Germany dropped from 1.5% to minus 0.3%, and Italy from 3.2% to 0.2% in 2023. Russian GDP, though in the negative, improves from minus 3.4 in 2022 to 2.3% in 2023. There are a few leading indicators showing signs of slowdown in global economy. For instance, manufacturing PMI is going down. PMI is actually Purchasing Managers Index, which tells us whether the market conditions as viewed by purchasing managers are expanding or staying the same or contracting. PMI provides information about current and future business conditions to companies, decision makers, and analysts and investors. Consumer sentiments and business sentiments values show a downturn. From the July 2022 IMF projection, the wheat, the Brent crude index softened in October 2022. But on the other hand, the natural gas index has risen by a whopping 700%. The inflation rate in the economy, advanced economies, and the emerging markets and developing economies has risen sharply by 2022, but is expected to drop appreciably in 2023 and 24 as per the October IMF outlook. The US inflation rate is soaring to curb inflation. Chinese RMB is improving against the US dollar as compared to euro. Ruble has also appreciated as compared to the end of June 2022 against the US dollar. Brent crude prices are supported by the OPEC Plus decision to cut output in the ongoing standoff between Russia and the Western nations. Iron ore cargo of 63.5% Fe content for Tianjin delivery fell to a 10-month low on the fears that the industrial input demands would be subdued. With Europe pushing to ban all coal imports from Russia, several governments announced plans to reactivate coal power plants to avoid power outages. Sky-high natural gas prices in Europe and Asia have intensified gas to coal switching in many countries. Now, the metals are pressured by fear of global recession too, and the prices of steel scrap in Turkey, HRC in China, nickel, aluminium, copper, lead, zinc are sliding. Let's look at ferroalloys. Silicomanganese prices continue to decline, linked to steel making throughput. For ferrosilicon, supply remains tight and the prices have stabilized due to capacity reduction. In the shipping industry, the freight rates are continued to fall due to falling global trade volumes as a result of shrinking demand, easing supply chain disruptions, and much reduced port congestion levels. Coming to steel industry, we see world crude steel production decreased by 3% in August 2022 compared to August 2021 and by 5.1% in January to August period 2022 year on year. The Middle East produced 3.2 million tons in August, up 34.2%. The only region that produced more steel year on year. High oil prices are supporting the Middle East economy. India and Iran are the only top 10 countries still making more than previous year. Both economies are not impacted by recessionary fear and are having positive GDP growth. Steel is highly recyclable and the world's most recycled material. The average lifespan of steel products is 40 years before it is scrapped and recycled. End of the life steel scrap is expected to increase since the mid 2020s as this material starts to reach the end of its life and is expected to touch around 900 million tons by 2050. The share of EAF producing high quality steel will increase, requiring the availability of scrap and DRI. To protect our environment, green steel production is being promoted. Adopting an approach combining scrap, DRI, and EAF using hydrogen is currently considered the most viable and long-term solution to achieving carbon neutral steel production. Green steel, hydrogen DRI is increasing and will be replacing the BF-BOF route. Green steel, hydrogen DRI route uses EAF, as we know. Graphite electrode capacity is required to grow at the same pace to meet the demand. Let's move to graphite electrode scenario now. The prices for the main raw material, both oil and coal-based needle coke, have moved southwards, as you can see. Prices of graphite electrode have softened due to lower demand by the steel industry globally, which is registering negative growth in the first 9 months of 2022, but may see an uptrend in the coming winter. There is another major development in graphite industry. Due to the temporary slowdown shutdown of a plant in Mexico, the graphite electrode supply, demand, and prices are expected to be unbalanced globally. The Western Hemisphere would be more affected. Why ALTech? Why ALTech for electrodes? Because ALTech corporate values lie in its assertive adhesion to good citizenship, good governance, celebration of diversity, unshaken commitment to net zero carbon emissions by 2050, zero tolerance towards environmental protection, servicing and developing the local community where it operates. ALTech plans firmly to build a greenfield graphite electrode plant in the Americas. ALTech is deploying tangible measures to keep its customers' supply chain robust and safer than any other incumbent. Nimbleness through the proximity of service while benefiting from a global presence. Resilient and diversified supply chain for uninterrupted and safe supply of graphite electrode through maintaining a strategic 1 year usage of pins, which are most important, inventory in the plant and proximity warehouse. Servicing customer locally through 4 existing warehouses while rotating finished graphite electrode stock up to 5,000 tons in each of them. China, Belgium, Turkey, and South Africa. And nonetheless, 2 more upcoming warehouses, one in Latin America within 2023 and another one in North America within 2024. A unique offer for a proximity VMI, vendor management managed inventory, a pain relief for cash constraints, and safety of supply. ALTech Group proudly holds 5 ISO certifications and preparing for the 6th. So they are ISO 9001:2015, which is quality management system, 14,001:2015, which is environmental management system, 45,001:2018, health and safety management system, 26,000:2010, social responsibility, 28,000:2007, security management system for supply chain, and coming soon, ISO 50,001:2018, energy management systems. The ALTech geographical footprint spreads across the entire globe in all 5 continents. And for today, this is what I have for you. But we take this opportunity to thank all our customers who are liking the report very much and keep sending words of appreciation to us. So thank you once again. See you next month. Bye bye.